All right, welcome aboard. Got Charlie Mattingly here today, and we're going to be talking on the elephant in the room, you might
Yeah.
say, with the U.S. debt ceiling. I'm sure a lot of you all have heard. Charlie, we're going to just ask you a few questions today about that, and
Yeah.
hopefully just inform you all of what's going on. First, I think just could you introduce what all of this is about and how this impacts our clients?
Yeah, absolutely, Nolan. Thanks, man. And first of all, congratulations on your recent graduation. So that's
Thank you.
exciting. And you'll be taking the CFP exam in November. So we're excited for you. I'm excited that it's you studying and not me, because that's very challenging. But anyway, yeah, we've got a little bit of a news headline item going on, right? It's causing a lot of consternation. And we hope this gets resolved sooner than later, but we don't know. And just in case it doesn't, we thought we'd get a little bit of message out. Now, let's just jump in real quick. I thought this was an interesting graphic, Nolan, as far as the debt ceiling. And there's no good that can come out of this fight. The longer it goes, the worse it's going to be for the markets and the uncertainty. Markets don't like uncertainty. But nonetheless, what's going on here? The debt ceiling is nothing new. You can see in fact, I think the number since 1960, the debt ceiling has been raised 78 times. So nothing new going on. Obviously, a higher debt is not good for our economy. The interest payments on our nation's debt become a huge line item in our budget. And so that kind of restricts the economic growth a little bit. So we all know the dangers of debt, but this is nothing new. Probably has gotten more political in the most recent years, Nolan, I would guess, which is frustrating to all of us to have to watch that, but it's just part of that process, unfortunately. So that's kind of the background on that, and today you and I are going to talk about, hey, what do we do? What can we do? But before we jump in, I mean, what do you think, Nolan? And this is a tough one to even talk about because there's so many unknowns.
That's right. I think you're really kind of getting into, as you said, just a lot of unknowns, a lot of speculation, a lot of articles you read. None of it's necessarily fact. What we do know is June 1st is that decision date. But I think it's interesting that, it's been changed 78 times, I believe you said, since 1960. That shows this can become very political very
Mhm.
quick. It used to not be so politicized, I believe.
Yeah, yeah, it's frustrating because it's in the news a lot, and that makes it difficult for us as investors. But we're going to talk about three things today that we're doing personally that we think everyone can do, just to kind of stay focused on the things that matter. And Nolan, the first one is the blocking and tackling that we always talk about, and I love the concept of, hey, keeping our personal balance sheet in check. I think that is just crucial to having a successful investment, philosophy, because it allows us to stick with our plan when we have a strong balance sheet. We're not stressed out. So that's it. Number one is keep your spending in check, keep the debt low. Unlike our country, I guess maybe one one way to think about that. And
Yeah.
then make sure that your net worth is something that you're keeping track of, and we'd like to do that for all of our clients as well, so that you can see the true picture of health. And so that's the number one thing I think that we can all control. Any thoughts or comments on that, Nolan?
Yeah, I mean, I love how you kind of ended that there saying what we can control,
Mhm.
because a lot of articles you read make you think you can't control much and that we're doomed.
Yep.
And I think there's a lot that we have in our control to do that. And of course, we don't know exactly what's going to happen, but if we have our lives, our investments, our philosophies in order, sticking with the plan,
Yep.
then that can only lead to the best success possible.
Yep. I love it, man. Number two is, we used an article from NPR actually to help with this, and it was three money tips in case of debt ceiling. But we changed them just a little bit, and one of theirs was, or their number two was, don't panic, and I put don't panic, sell, because that's what we feel like we want to do when we see these headlines. The markets get disrupted and they get volatile, and they go down. Quite frankly, we want to sell and run away from that threat because it looks like we're losing money. And so again, don't panic, sell, really, ever. And one of the things I read was, hey, we got to treat this situation just like we would any other like a potential recession or a potential whatever in our lives, and so we never want to panic sell.
Right. Absolutely. I mean, that's one of those core foundational
Mhm.
principles we teach, Charlie. And I think that's a great thing to live by with any event, not just
Yep.
this right now. But like you said, maybe it was the '08 financial crisis or anything.
Yep. And I think to not panic sell, that means we have to be prepared for these situations before they
Right.
occur. And that's why we think, diversification on a global scale, having the right risk allocation for someone's goals and time horizon is just critical. I mean, so if we've done those things, which we do with our clients, then we don't have to worry about selling when these things happen, and potentially causing more stress than otherwise might be if we just kind of stuck to the plan. In fact, Nolan, the research is overwhelming. The research that shows when people sell and try to outsmart these kinds of events, they actually lose more money than the event itself. And so
Right.
that research is solid, it's indisputable. And so that's kind of helps us to stick to that plan as well. But number three is what we've alluded to already. Stick to and only stick to what we can control, and we kind of, Nolan, have to let go of these things that we can't control, and that's easier said than done, I realize. But what do you think? How do you do that? What's your suggestions?
It's hard because, like you said, I think we got so much noise
Mhm.
around us all the time, and it's like you want to let it go, but I think people also want to stay informed too, and it's good to be informed. So, how do you stay informed with not letting that impact your decisions? And so, I think just always going back to why we do what we do, and like you said, it's sticking to the plan
Mhm.
and reminding ourselves that we have to be prepared for these events that maybe the market will go down, and we have to be ready for that. So I think just market education with ourselves is,
Yeah.
is so important.
Absolutely. I'm going to share something real quick before we wrap up. And I think it helps me, Nolan, like when these things come up, and the stock market goes down for whatever reason, I like to remind myself that, hey, all of us as investors own these companies. This is just one example of an ETF or mutual fund in this case, one of many. But nonetheless, you recognize the companies that are in this particular mutual fund or ETF. We all recognize those companies. And quite frankly, if this, whatever's going on in the news or the headline, it really doesn't make Microsoft a different company. It might make the price of Microsoft go down because people are afraid and other people are panic selling, and that drives the price down. But the company itself that we're invested in, Microsoft, Apple, Eli Lilly, Visa, those companies have not changed one iota. So we still think
Right.
they're great companies. We still want to own them. And in fact, when a price of a company like that goes down, it really presents an opportunity for our clients to own more of it. But we don't see that very often when we see the dollar amount in our accounts go down potentially. And so I think that helps me to kind of reconnect to the very basic tenet is that as investors, we own little pieces of these great companies, and the price may go down, but it's totally unrelated to the quality of the company that we own. So I think that's something I have to remind myself of.
That's a great point.
Mhm. Yeah. So wrap us up here, Nolan. But our veterans out there that have benefits, Social Security. You did a little bit of digging. Did you find any reason or any? And you don't have to speculate too much, but I mean, do they have something to worry about?
I really don't believe so. It's always good to be prepared for a worst case scenario, but from a lot of research you see it's saying, maybe at worst case it's delayed a month,
Mm,
and that can be difficult. But I think compared to what you know, the worst case scenarios, I think 1 month
yeah.
might not be the worst thing.
Yeah. I think the politicians would feel so much heat at that point that they would
Right?
have to come to.
Absolutely.
I don't think anybody believes it'll get that far.
No.
But you and I discussed anything's possible. We're not going to try to speculate on what might happen. We have no idea. But it all goes back to those three tenets, I believe. And so thanks for looking into that stuff for us. But hopefully this was useful. And thanks for tuning in. And please reach out, call, text, email with any questions you might have, and we'll cover more details. Thanks again, Nolan. Appreciate it.
Absolutely. Thanks, Charlie.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only. It does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from these projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.